Market observations, Darwin, Northern Territory. Now today this is a shout out to Lamoni for your request for this city. I've loved your comments. It's much appreciated. And this is especially at your request. If you would like to focus on another area next, at your request to the audience, let us know in the comments below. Different markets that you might be looking at for yourself. We'll try our best to feature them up next. There's only so many markets that we can focus on. But then if you would like to see some of the markets that we have looked at in the past, please look at some of our previous videos on this channel. And this is we work really hard here behind the scenes. Chris, who's standing behind me here, in editing and putting these videos together. Eric in generating the research, and the whole entire Ripehouse team in getting these videos together. There's a lot of work that goes in. It would be much appreciated if you could show your love by liking this video, sharing it with your friends, posting it up on Facebook, popping into some groups for discussion. Let's create some dialogue around this. Let's put some context around it with some opinions and some people on the ground. If you like what you're hearing and you'd like to see these videos first before anyone else, subscribe to our channel. It would be much appreciated. And then hit the bell icon to make sure that you receive notifications the moment we do publish a video. So once again, market observations for Darwin, Northern Territory. Let's dive in. So, as usual, I wanted to begin by starting to talk about property investment is a science. Okay, I've been investing for almost 20 years. As I've gone on this journey, I've learnt things, I've made mistakes, I've evolved and hopefully tried to avoid repeating those mistakes. I have a software engineering background, a data research and analytical background. That's what I did professionally before I was able to leave my job 10 years ago through property investment success. Okay, in my application of finding areas to invest for myself and for clients, it comes back to this over and over again. Property investing is a science. Obviously there's human elements, there's subjective elements, there's emotional elements to it, but fundamentally we can find areas that are set to perform before the masses. I call it entering the buying window before all the others. We can look at data, we can analyze this data, and we can pick our spots to enter before the masses arrive. Okay, in doing that, it is a science. Today I'm going to be taking a deeper dive for Darwin at a city level, looking at the local government area level dynamic, into some suburbs, and then I'm going to be diving down into a street level. You're going to be looking inside how we dissect this type of market. So look out for that towards the end of the video. There is that extra content around street level analysis. This is coming from experience. Okay, this is coming from things that I've learnt over the years, things to avoid and to not to do. So please stand by. But fundamentally, how we select an area, a street, a suburb, a property, it does come back to data analysis. This is the overarching formula: demand versus supply. Demand and supply. It's like any market dynamic equals the overall opportunity. There are a number of factors that we look at on the demand side, and then a number of factors we look at on the supply side to determine that opportunity. So let's dive in. The market opportunity. Let's assess things at a macro city level. Okay, Darwin has nice diversified employment. For those that don't know, Darwin, about 80,000 people. It is a capital city of the Northern Territory. All right, it is as a capital city, generally having a lot of government services, the focal point of the government in the Northern Territory in this area. That's coming with it with a lot of public administration type employment and focus. It's coming in health. This is not really at about 10% of the overall employment. This is about average. Okay, we've got our hospitals, we've got our health services, but it is not a focal point of the area. And then it's quite diversified. So if we take the aggregate or the total of these top 5 employment types and group them together, we're really not even pushing about 50 or 60%. So very diversified employment, but you would expect this for a capital. Even though it is the size of a small regional city, it is a capital, so you would associate it with all of the government services that go along with it. We like this diversity. We don't have a one mining focus. This is good diversity to continue with. So let's continue our focus or our study on employment. this is not looking so rosy. All right, so this is one of the first cracks that emerges, and this is a very unbiased viewpoint of Darwin. I love Darwin. Okay, it's one of my favourite places in Australia to visit. And, going back 10 years, it was actually one of the darlings nationally for property investors. Okay, yields were off the charts. We had some very strong growth, a lot of really good investments on the horizon in Darwin. People did very well. But like Perth, we've also had a large and prolonged retraction. Okay, we've had price reductions, and a lot of people have lost a lot of money in Darwin. And I think people think of it as a capital city. They might be in Sydney and Melbourne. They think of it a capital city, so it is insulated, but it's not. It's 70 or 80,000 people. So we have to assess Darwin like a small regional. It's the size of Rockhampton. It's a little bit smaller than Bendigo, to give someone, to give you those ideas. So when we're analysing Darwin, it is not using the same lens as Perth or Brisbane or Sydney or Melbourne. It is using a lens of a smaller regional city. So we have to be very careful of the spread of employment, and then these localised factors like higher or spiking unemployment. What is going on the ground? Okay, I'm not here to speculate. This is more, let's look at the data and let's assess the data. I'm not going into a deeper dive on where the unemployment spikes have occurred. For me, the macro is enough. We've gone from, underemployment, we've gone from extremely tight and very healthy employment through to, now going up towards 6% unemployment. For me, that's, going through a COVID period. It's not overly high unemployment, even on a national level. 6% is still quite healthy. For me, what is concerning is the trend line. Okay, things are going in the wrong direction, and we're at the top of an unemployment cycle as of right now. All right, as of 2022. So for me, that is a little bit of a concern. This is 12-month-old data, by the way. So this is 2021. We haven't got 2022. This is a concern. I would like to have seen this in the last 12 months, correcting or coming down. Hopefully, this was a localized factor around COVID. Remember, Darwin were very, constrained around COVID restrictions. They closed borders very aggressively. You have a lot of transient work coming in and out of Northern Territory. That may have been impacted. Okay, so that may have been an example of unemployment. Let's have a look, and I'm not going to take this signal on board too much to begin with, because the story in the last few months is what is important. Has unemployment continued to trend up, or has it retracted down to, back towards its longer term average of 4%? That would be great. If you've got any opinions on this, whack it in the comments. Let's have a chat about it. If you've got other further research that's filling in this gap after here, I can get Eric involved. Eric, our head of research data science, he's got a background in actuarial science, to chime in as well. Let's fill the gap here after, January 2021 around what's happened in unemployment. Okay, we might have to dive in, we might have to dig into individual articles, etc. It might not have been released from ABS. That would be good to fill that blank in. So at the moment, this data's too old. I would like to have seen this tightening back down and trending down. This may have been a COVID-induced unemployment spike. I won't take that signal on board as a negative at the moment. Population is another one. All right, population. We've seen this long trend line of a lowering population amount, okay? We had a lot of activity there in the early 2010s, good, strong, healthy population growth up at 2%, a lot of new homes, new suburbs created. Now, as time has gone on, this is a very bearish trend line. Population is now slowing down to a very low percentage on a national scale, okay? So low population. I always say the question, is there unmet demand? Is there 3, 4, 5, 10% of people wanting to move to Darwin, but there's just not the houses there to facilitate that move? That is the next question. I would probably say, based on this data point alone, that because of this long and prolonged trend line, it is just due to lack of people wanting to move there, okay? Because, generally, if there is unmet demand, it is usually corrected within a shorter time frame than this. So it would suggest to me that over the longer term, there has been a decrease in the amount of people wanting to move or moving to Darwin for employment or lifestyle factors, etc. So that, let's investigate that though. Let's see what the data is saying to us. Is there unmet demand? Is there very tight rental markets? Is there very healthy and high turnover in the buy side of a market? At the moment, at a high level, that is a bearish signal. Let's go into the purchase analysis. So this is once again macro. We're now trying to dig in at a local government area level in Darwin. What is going on the ground as of today? This data is refreshed very regularly. We have to be making assessments based on data as of today and not as of 6 months ago. We have to be a primary source of data. We cannot acquire it or buy it from somewhere else. We have to own and cleanse that data in a very timely fashion to make very important purchase decisions. Days on market, it is a secondary signal, but it is very tight. Slight trend line upwards, but still at a national level, extremely fast turnover of properties, and it has corrected downwards very sharply in the last month or so. All right, so very bullish signal there. High competition, extremely high competition here in December and January, back to average competition once again in February. This is an interesting, area of focus. Why is there this such strong competition over December, January? Is it made up of owner-occupiers or investors? What is causing it? We've gone from a relatively quiet period to bang, very high competition, and then back down to average levels coming into February, March. What is going on here? Is this a buy zone? Is this the formation of a buy zone now or slightly into the future? This is something I want to pay attention to and come back to later. Rolling asking price. We've obviously had an asking price correction. It might not necessarily be a sold price correction, just a softening in the confidence of sales agents and the vendor dynamic there. And asking prices have reduced about that 10% over a 6-month period, but they have recovered. They are back up to the $650,000 median asking price. This is a 90-day rolling average, so it does encapsulate, 3-month period. So it does take a while for this to build and for, things occurring today to be averaged in and factored in. We do need to do a 90-day rolling average here just to gather enough sample of sales or listings to get a reliable and consistent trend line. All right. So here it is a slight lag indicator, but it is very timely and the signals here are strong. We've got the top end of the market starting to move, which is a deep sign of confidence. We've now got the asking prices coming back and matching our 12-month ago highs. And it has been a strong recovery. So this period here, remember back to December and January, where we had very high competition, that may have been moving the top of the market. It may have been sucking out supply, and that is now causing the top end of the market to run quite nicely. Let's see what the likelihood of the broader market to run in the same way. Remember, you look at the top end of the market in Darwin. You've got some oceanfront stuff there. You've got stuff between the CBD or in and around the CBD, right out towards university, following the coastline there. A lot of really nice homes, but yields are not really strong. It's owner-occupier buyer stock. Top end of the market is not where we'll be focusing as investors anyway. So we're not looking at this as a buying, opportunity. We're looking at this as a signal that generally the top end of the market shows strength, it shows confidence, and is it going to pull the median up with it? That's the next question. Stock inventory. We've seen a gradual increase, okay? So in number of houses in red, a gradual increase or very slight increase in the total stock inventory on the market, but the number of houses available for purchase has remained quite consistent. A lot of units, a lot of other type properties available for purchase. Remember, when you're coming into places like Darwin in particular, it's an 80,000 people city, but it does have a commercial district. Got a lot of government services, employment around the commercial district with hotels, units, higher density stuff. Once again, not necessarily investment class because we can't control supply. The number of houses, the low number of houses on the market is once again a bullish signal, and it is quite consistent. The one check and balance here is overall we do have a higher number of stock more broadly on the market. Okay, we are generally insulated from that when we do focus on a house, but this is still not turning over. All right, it is still providing housing options for residents, and if it starts to, to become cheap, then that might be all it takes for people to dive into the unit market. It could cause a little bit of concern in the future. At the moment though, I'm still comfortable with the low number of houses available for purchase. So this is where we start combining these things together. Very hot, very efficient, high turnover days of remaining supply. All right, this is a primary signal. Anything under 150 is very low on a national level. We have seen recently markets down towards the 50 days of remaining supply, extremely tight, extremely limited supply. This is now, it has tightened down now to around that 100 days of remaining supply. This is a very bullish signal, okay? And this is once again now reiterating that we are starting to see this coil tightening. Low days on market, low number of houses available for purchase. We've now seen the top end of the market starting to move. Days of remaining supply at 100. That's a very strong signal in the market, all right? What we've done, right, this is all a very similar story. Up until now, I'm going to pause, because up until now, it's been a very similar conversation that we have had about Darwin compared to places like Perth, Brisbane. We focus on Adelaide more recently. These are very heated markets, particularly Brisbane and Adelaide. Very heated markets, but we've already missed our buying window, all right? So, it's been a very consistent story with a lot of the areas that you, our viewers, are asking us to focus on, where they are very heated. They're in the news cycle, and the data analysis up until this point has been the same. But Darwin does diverge from here very differently, because this is the first case in point. Purchases above asking price. When a market is running, the sales agents, the vendors, they don't know what the property is going to sell for. They just draw a line in the sand, and then we have offer over offer scenarios. This is when a market is firmly, you've missed your buying window. When we are looking for a market to enter, it needs to be extremely tight and coiled, tick. And we don't have this large suburb discounting like we're seeing in, so prices are selling for more than the asking price, dramatically 5, 6, 7% like we're seeing in Brisbane. We are seeing still good, strong negotiations to be had. This in itself has been, a demonstration of a softer market, but it is also a market where negotiations are to be had, right? It is still a buyer's market as such, if you look at this signal alone, but just the fact that it has tapered off here through a period of December and January of very high competition is a slight bearish signal. It's showing there is a lack of backbone in this market where it hasn't really tightened and started to rise. What we would expect to see from here, and I might want to see another month or so of confirmation on this, is that this very tight, coiled up market is now starting to really run away. We're starting to get offer over offer. People are listing their property for $500,000. It's starting to sell for $520,000. Okay, I want to start seeing that, and I want this red curve to start moving up here, and if not, then moving right up here to 5, 6, 7% like it is in Brisbane, etc. That's what I would like to see. The houses are what we need to be focusing here, not red other. Okay. The blue houses are what we need to be focusing on. This has been, a very healthy market. 12 months ago, the market was running away. We saw that there were the asking prices increasing. We saw the market dropping back to 0% through that 6 months recovery. We've seen it dial back up here again as the market really tightened over December and January. And then we've seen it pull back, which is a slight bullish signal. It might just be the market regathering itself. I would like to see confirmation here for probably another month or so before I'll be entering in this buying window. Okay, at the moment it is a buy signal. At the moment the buying window is a strong buy, but I just want a little bit more confirmation. I want to see this bounce off 0% here and then start trending upwards very strongly like we saw 12 months ago. That's when the market will really heat up. So small confirmation required, maybe only a few weeks away from receiving that. Let's keep moving through. Rental analysis. So this is where we might be able to step out on a ledge. All right, we've seen a very nice coiled market. We've now seen discounting a bearish signal very slightly, but if it bounces off 0% back upwards again, it is once again confirmation, a very bullish signal. Rental analysis is where we can really start building confidence in our access into this market. Rental market, days on rental market, extreme tightening in the rental market, okay? There has been a general trend line up over the last 12 months, but in the last 6 months, it has been a tightening in the market, down to very low, very low, high turnover in the rental market. Properties are renting very quickly. This is a very strong signal. Remember, for markets like Darwin, a lot of people moving to the area. Well, there's low population growth, but people generally moving to the area, especially in places like Darwin, will generally rent before we buy. We've demonstrated that in our research now going back almost 10 years. The relationship between rental markets driving buy-side markets. A lot of that research we released in 2015. We're on the cover of a story of Money magazine back in I think it was August or September, and we talked about the rental side of the market driving the buy side of a market. If people are moving towards an area or there's extreme housing shortages in the rental side, it generally becomes cheaper to buy than rent, and they move across to the buy side very quickly. The job might be going well. They're really happy with the new area. They've dipped their toe into the water. The rents, this is a great place. Let's go and buy, honey. That's the sort of the psychology that we look for. This is a very tight rental market. You would expect this to start now resulting in rents going through the roof, vacancy rates driving down through the floor, and people moving over to the buy side in a couple of months' time. Rental listings, so properties are turning over very quickly. Is this a factor of more people active in the market or less listings? We're seeing it's a factor of less listings. All right, so this is consistent now with the story of low population growth, very sensitive market to this dynamic, and the reason why the properties are renting faster and turning over faster is because we just have a dramatic shortage of rental listings, down now towards 1%. So this is a bullish signal, and it does confirm what we already know, low population growth coming into the market. It is a very sensitive and subtle market, but this once again is a bullish signal. So far, the rental side of the equation is confirming our buy signal on the buy side. This, for me, is a major red flag. What's causing this? Okay, weekly house rent. You would expect this in a very tight rental market to be continuing upwards. We have seen here in March, obviously we've still got 1 day to go. This is live data. We pull this as of today from our databases. The weekly asking rent for properties has just trended down dramatically. This may be low sample size, okay? This might be a localized factor. We don't know. But for me alone, you would expect this to be very healthy and continuing upwards. For this, 10, 12% reduction in asking rent over a 1 month period, it's a 30-day rolling figure. That's a little bit of a concern. Remember, it's subtle factors occurring. Darwin's not a big place. This is a 30-day rental figure, a rolling figure, so it's not a huge amount of rents, properties that rent each month in a city with this lower vacancy rate. This might be a lower sample size issue. At the moment, this is a pause and a wait. It's another signal to me that let's just wait another 4 weeks. Let's see if suburb discounting does start to bounce off that zero. I only want it coming up slightly. I don't want to be competing against too many other people. I just want to see, give it another few weeks that rents, this might have been an aberration and rents are back up here again. I don't want this trend to be continuing down this way and rolling over. I want it to be bouncing back off again. So I would like to see probably another 4 weeks worth of data into the Darwin market to get a firm buying signal. All right. Remember, we are all about buying before the masses. We're not waiting for this confirmation for another 3 or 6 months. We've got very good, and hopefully this channel is about education, so you too can get very good at finding those buying points. We need the confidence to be able to act, but we don't want to be too confident and wait for the masses. We still want to work counterintuitively to them. All right, so this is how we're operating. This is where the science and this is coming to a fore and helping us digest this. I want to see another month's worth of confirmation here. Yields, once again, this is a secondary figure. We could have sort of talked about what to expect here. This has dropped off a little bit here in the last month because we have seen the asking rents drop off as well. But overall, at a city level, median asking or median yields is just over 5%. This is a good, strong yielding environment. But when you compare it to other key regionals, it's it's an average yielding figure for a city of this size on a national level. So it's not really, a strong yielding environment for an 80,000 city. This is a secondary figure. We would see this rolling over as well with the asking rents. I would like to see yields recover back up here to 5.5% for a buy entry. All right, I'm going to leave the, we've got medium sales prices. We have seen the uptick more recently. All right, houses up here, very bullish signals. That very strong buyer activity in December and January, here, the very hotly contested market, has already seen the market starting to run away. All right, we've already started to see 15% price growth in in the last 3 or 4 months. Obviously, the market started to really run. Is this a sustainable bull run? Is this the opening of a buying window, or have we already missed our buying point? I don't like to get pushed around by the market. I would like to see another 4 weeks worth of confirmation for me to enter the Darwin market on this data alone. This is a strong signal. Is it sustainable? Are we entering an uplift period? The jury is still out.